Good morning, everyone, and welcome back to this new edition of the Daily Analysis. Let's do a recap of what happened yesterday. Day that had started a bit as expected with, levels that we had identified, respected up until this just before the opening. Everything went smoothly, in my opinion. Then, following Lagarde's speech, a few things started to happen. A few more alarm bells that I've been reporting to you for a few days now. Or maybe even longer. And right now, the focus yesterday was on the volumes, which I keep telling you they were low. Yesterday they returned the volumes, and they returned following the speech of the Law of the Lagarde with a very, very powerful burst on the bonds, giving in there a nice reversal of bonds also in short European ones, in particular the German one, and ERM in general, a little bit on all of them, after which I'll show you some graphs of both the ZN and the ZT, also the American one. In short, they reversaled quite a bit. Then going back to the equity markets, they slipped a bit, moved sideways, except that they continue to experience pressure with increasing volume, with pressure that pushed prices toward the lower end of the ranges we had identified. And in short, this morning the main theme seems to remain the same, with this weakness and with volumes accompanying the declines more than the rises. So maximum caution is needed, especially today and Friday. Also, as I've been pointing out for some time, the long-term charts reflect a considerable loss of momentum, a phase of stagnation, and in my opinion, I've been saying this for days, the beginning of a reversal could be underway. Maybe I'm adding, I know I'm not a fortune teller, but these are all warning signs, all canaries in the coal mine that we must always keep in mind if we want to be ready for a regime change. Because when the environment shifts from a ranging phase to a bearish bias, if we keep trading as if it's still a range, we risk getting hurt. That's why all these factors need to be taken into account. We also need to consider the fact that gold has returned to its highs, it's trading above 3.8, roughly speaking. Yesterday, silver also made a strong and impressive upward move, and so all these factors combined, along with the renewed rise in tensions, even from a domestic standpoint with the statements from Elon Musk, in short, with a few tweets that definitely stirred things up a bit. All of this is cause for concern. As I always say, markets need calm and stability in order to grow. In addition to this, as I mentioned in the daily analysis a few days ago, the CTAs are now fully invested in the market, so they have little left to buy in June. Soon, even the buybacks will decrease about 6 billion per day. So all of this could potentially trigger a market correction. So maximum caution is needed, especially today since it's Friday. And with that said, let's move on. I'll show you briefly what happened yesterday on the bond. Here you see yesterday at 2:00 p.m. where the discussion about the flooding, all of this is the ZN, this is the ZT, up here on the top right, this is the European bond. So all of them have pulled back quite a bit, basically coming down to rest on support levels, on very important supports, at least as far as the Bund is concerned. So let's definitely keep an eye on this situation. With that further introduction out of the way, let's move on to from an operational point of view, starting with the Nasdaq. Today, the only data point, as I mentioned earlier, is the only one really worth noting. Let's start with the Nasdaq. You can see that yesterday we had this false breakout. Up here, the false breakout of the highs that I had pointed out, which did a great job of trapping even more bulls. Then the market started to pull back quite a bit, and last night it hit a new low. In other words, yesterday evening it reached a new low around the 21,480 area. After that it recovered a little, but now we're running into this whole area that's acting as a resistance at the moment. So be careful, the highs and lows have been decreasing except for this bit of noise at the opening of the European markets, but it's a situation to keep an eye on. Obviously, a return to the upper part of the range could mean an attempt to break through the top. Otherwise, it could absolutely go back to retest the lows, break them, and look for a new balance further down. I repeat, this also depends on all the news that might reach the market, including from a political standpoint. Perfect. Let's move on to ES, which we find here. Here too the situation is similar. We're working around the 5,970 area at the moment, just below the dividing line. You can see it is quite clear this whole BC3 range is probably split exactly in half. So let's keep an eye on this level, because a return to the upper part could lead prices to retest the top of the range, or holding this, let's say, median level could bring prices back to retest, well, the lower level, whose break could then obviously lead to a test of this area here that was formed by these lows here. We'll see how and if we get there. On the upside, of course, we are monitoring yesterday's range short. The 6,800 level I pointed out yesterday morning has remained unchanged, except for a bit of noise. But if I zoom in, we probably only see wicks above 6,800, maybe more or less. 6,800 has stayed intact. There are only wicks above 6,800. So 6,800 absolutely remains intact and is something to keep monitoring. Let's obviously also take a look at the other two American futures, starting with the Dow Jones. Sure it is, showing a bit more strength at the moment, working in the upper part of the range. It has recovered and hasn't pulled back much, but then again, the Dow Jones is also very volatile, so it doesn't take much for it to pull back. The midpoint is what I'm marking for you now, around the 42,300, 42,400 area. That's the level to watch for any potential bearish attacks. On the upside, of course, we're monitoring roughly the 42,600, 42,700 area, because the spike remains this high here is still the one to watch. Nothing has changed compared to yesterday. A similar situation applies to the Russell, which fortunately has managed to recover the 200 level. As you can see, it's currently trading above 215, so it's strengthening and probably starting to show the scenario I've mentioned several times in the past, where I expected that thanks to Trump's more protectionist policies, small and medium-sized American businesses could benefit more from economic growth that is more local rather than being in the hands of multinationals. At the moment, it's going back to retest the area of the high, so let's keep an eye on the 216, 219 range. More or less, that's the area of 2,118, sorry, that's the level to break, which is this high right here. A breakout could push prices into the area of the highs, and today is 1D max, which is around 2,130, 2,135. Let's look at the DAX, which just opened recently and is also starting to pull back. Yesterday it also made a nice spike upwards, a strong breakout of the highs with volume, only to then be heavily sold off. In the afternoon, as I was saying, the volume started to come back, so even on the DAX they have returned not a huge amount, but they are starting to come back. At the open this morning, we can already see these two candles here that are moving downward and in short have come with volume. So as a range, we're obviously monitoring the low recorded yesterday at the close around 24,200, and we'll also keep an eye on 24,150, which corresponds to this other pivot low that could complete this range. Of course, if it breaks here, we're entering a dangerous area 23,980 to 23,900. On the upside, we obviously watching the high recorded on Wednesday. This is the first stronghold, which also corresponds to this area here. But as you can see, was only briefly touched by wicks, so this remains the high to beat. Let's look at gold and oil, which yesterday in short remained sideways within this range. I'll zoom out so you can see better. We went up to test the upper part again, then came back down to the lower part, and that's it. We're just monitoring the range here as well. Not much has changed. Keep an eye on this range level. You can draw two nice horizontal lines with the median and you can trade this range properly. If the range breaks, of course, you'll adjust to the new scenario. Let's look at gold. Here it is. I was saying held them in short yesterday. It first went up in the morning, then in the afternoon it went to retest the lows at 3,360. I recorded here, and there it went to retest. Now it's retesting down. It stopped in the median. Probably here too we can go and identify a range exactly like for oil. You draw two nice trend lines. Maybe here you put two like this. Anyway, I'll just quickly add them for you just to show you, to give you an idea so that you have a nice range to work with. Okay, and you add a nice line. I'm drawing it quickly, so it's nothing precise, but even this can already give you an idea. Maybe you add another one here, and you have your own precise working setup for gold, in addition to seeing the levels that are within the range. I'll expand it for you and show you the profile, which is part of the pro features that offer you my levels. But with an extra detail, they basically show you the length based on the number of touches and the thickness based on the points generated over a measured period. So you can absolutely keep this as a study reference. I'll leave it up for a few more seconds. Then I also wanted to show you silver, which as I mentioned yesterday as well, it broke out of the range, let's say, that had formed after the strong upward move we already saw on Monday. It then moved sideways at the highs, and after breaking the new high continued the move. Now it has done the same thing again. Hesitation, a false reversal pattern, even though in the end it did give a few points, basically the usual pivot areas, 1, 2 and pivot. Breaking the pivot gave a few points, more or less matching the distance between the highs and the pivot, but then it stopped and stalled because there's no strength. There's a sort of run, let's say a kind of safe haven, so to speak. Silver is also one of those, in short, the market that then started to surge upward, trimmed its highs this morning, went to test, so let's see if volume will come in to support this further rise. Basically, we are already at the RD2 zone for silver. Okay, we still have to take a look at Bitcoin. Here it is. Yesterday it pulled back quite a bit. It had broken out of the range we had indicated. It went to find equilibrium around the 100,000 area, a nice round number, but now it's recovering. It's testing the range from below, so this could be a new opportunity to potentially short with a fairly tight stop, or if it re-enters the range, that would obviously catapult the price to the upper part of the range. I expect the first obstacle on the way up would probably be here around 105.5, where we have this line from the triangle that had formed. SPX is in a similar situation, of course. Look at how it has made all lower highs and lower lows. You can also go ahead and put where is it? There it is. Maybe a quick and simple regression channel drawn on the fly. in short, it's already nicely, clearly outlined. You can work with it and follow it throughout the day to get an indication of the trend. That is whether this is a continuation, because it could also come down and touch this area around 5.9 and then bounce back up, or it could break through 5.9 here and go on to find the new balance lower down. Perfect. We've reached the end of the week and of this daily analysis. As always, I urge you to be extremely cautious. Please remember to leave a like on the video, and we'll catch up later in the chat. Thank you all for your attention.